those rules doesn't work on the boom crash. Number one, wow, that's a nice buy. Number one is trailing stop loss. For instance, you enter a trade. Let me see if I can. When you enter a trade here, let's say you enter a buy, the market is going up, and you say you want to trade or stop. That means you want to be adjusting your stop loss as market is going up. When on the boom, it's a sell market, and then its opposite is the buy market. So when it comes to its opposite or the trend, when market is selling, and then as market is selling, it got here, and then after it moved to this level, you adjust your stop loss to this level. So let's say a spike happened, and then end here. The spike is long. Let's say it's long enough, and end here. Let me change the color. So the spike end here. This is where your stop loss will be taken from. It won't take the value here. So even though you are in this profit, you end up being lost, and market will close for you. Now, it also doesn't mean that stop loss doesn't work. Stop loss work, but when market spike in the opposite direction, the stop loss take effect where the market ends or where the execution ends. So your stop loss is here, but as a spike happened to this level here, the end of the red candle, that is where the stop will be taken. But let's say a spike happened to this level, the spike happened and end here, you will still be in profit because, okay, let me adjust. It end here, you still be in profit. That's how it works. The same applies to normal stop loss. Now, the same disadvantage to stop loss is the same advantage to take profit. For example, let's say you buy here, you buy at this price, and then you put your take profit here. So as you put your take profit here, market bought from here and gets here. Now as market got here, let's assume that this long spike happened and end here. As far as price is below, before the spike happened, it didn't touch your price. So the long spike, where the spike ends, is where your take profit ends. So let's say you enter the trade here and you are expecting just $3. Let me annotate. You are expecting $3 here, but the spike pushed to this level where it turns to $10. The market is giving you $10. They are not giving you $3. Even though your stop loss, your take profit is below. But as far as the spike cross, that immediate spike cross your take profit before stopping, automatically they give you all those profits. So a lot of people complain about it too. They say, oh, stop loss doesn't work, take profit doesn't work. Take profit work. It's just that they have advantages and disadvantages, and based on how you set them. And some things that work on currency doesn't work here. That's one truth about boom and crash. A lot of people have their own stories about boom and crash. I also have my own stories about boom and crash. What happened is that there is one thing that I always tell my people, that when it comes to what we call spike, that's what people fear a lot. Now, when market is on the downtrend, the market is on the downtrend on the 1,000, which is a selling, the buyers are accumulated and it's happening at once. So a lot of people will say, oh, we are afraid of the spike and stuff. But what I do mostly is that I always try to understand where market is coming from and where market is going. Once I understand where market is coming from and where market is going, I will be able to know how I will approach the market and then what to trade at that point. So if market is an uptrend on boom 1,000, my aim is to look for buy opportunities. If it's a downtrend on boom 1,000, my aim is to look for sell opportunity. So what I do is that the first thing is to look for the general trend of the market. I have to look for where market is going. Let me clear. So this particular asset, when we take it on 8-hour or 12-hour time frame, realize that it has been an uptrend for a very long time. That's from July 31st. It's been buying. So a lot of people will be entering sell, thinking that, oh, okay, it has finished buying. But the most important thing is that it's an uptrend. So if you are somebody who enjoy buying, that means you would have been a nice profit for a very long time till now. So let's check something. So I always like to zoom out so that I can see what we call pattern formation and market structure. So let me get these stuff here. All right, so before market will push up, market was doing a little bit of consolidating here, then finally market push up. All right, so even though this is a 12-hour time frame, a lot of people wouldn't take consideration or take it into consideration. We do what we call multiple time frame analysis. So multiple time frame analysis, you go from daily time frame, weekly time frame, even monthly time frame sometimes, to see what time frame is controlling the market or ruling the market at one point or the other. Now, before this structure, this long bullish move happened, you can be able to draw a trend line. So we can pick it this way. Somebody will draw a trend line this way. Someone will also pick a trend line this way. All right, so at the end of the day, the decision all these people will make will be different. All right, but at the end of the day, we got a reasonable move or a reason where that market will push up. Another thing that we have to look for is to get supports and resistances, previous supports, previous resistances, dynamic supports, dynamic resistances, key levels. Where did market structure broken? What happened at each point? Why did market turn at this point? So a lot of sellers will be saying that they manipulated the market here. But the truth is the market is going up on uptrend. Now, where manipulation would come based on my experience is this higher high here, this higher high here. A lot of people will be thinking that, okay, probably when market gets here, it will reverse. So that is when a lot of people will be jumping into a sell and all of them will be losing trade. So this is actually literally before market actually take a turn in direction. This is what somebody will call a manipulation. So we factor all those in your analysis. That is why when market is going up, you look for pattern formation, you identify trend identification, market structure. When you know the market structure, where is it going? At what point is market possibly to reverse? Now, this on the 12-hour time frame. You can come to daily time frame. Now you have seen a structure you want to follow. You come to daily time frame. You can zoom out again. Realize that what we do when you zoom out clearly, there is a conformity on the daily time frame with the second trend line. So we can take off the second trend line and maintain this, which means that we have a reason for this bullish move to happen. Now, most people trade on boom and crash. They trade on 1 minute time frame. So they made a lot of mistakes. Now, when you are trading on 1 minute time frame and then you are making mistakes, what happens is that because you see a resistance somewhere on 1 minute time frame, so you think, oh, okay, it has gotten to a resistance, so market will sell. But then when you do your analysis on daily time frame, you are going to understand that there is a point in time where market will not sell by observing certain things. So this is just about what things to do before entering a trade. Now, somebody will say daily time frame is in control of this market. When you come to weekly time frame, realize that what we drew on the 12-hour time frame, that took effect on the daily time frame, did not really work on the weekly time frame. Now, when you look at the weekly time frame, there's a different structure. So someone can say that market is respecting the weekly time frame. So somebody who trade based on weekly analysis wouldn't have any reason to enter a sell here after this long candle. If somebody will say Maribosa, after this long candle, a weekly time frame trader would not look for any reason to enter a sell here. But somebody who is trading on a smaller time frame will see a reason to enter a trade, a sell here, which market will just pull to this level and then continue going up. These are some mistakes that traders make. Now, for you to trade boom and crash perfectly, number one point is what is happening on the higher time frame. You meet people saying that it's better to buy on boom than sell on boom, but it's not true. Why is it not true? When you look at this structure here, you do have B and a buy at 23rd. Market will sell 23rd August, there about 2020. Market has sold all the way down to December. So it means that if you have equity and you are holding that trade almost a year now before you be in a profit, which I don't think you will do. So as market is selling, you sell. When it's ready to change direction to a buy, you buy. So please, do not say it's better to buy on boom than sell on boom. And don't also say that it's better to sell on crash than buy on crash. I actually tried them too and realized that it's just a fallacy. It does not work like that. Once market is going towards a direction, we must follow that direction and make money. Now, some people like me, I will still go for a higher time frame, which is the monthly time frame as well. So when you come to monthly time frame, you realize that our structure we drew is invalid. Our trend line we drew is invalid. So someone who is trading with a monthly time frame will pick each trend line from here, which means that market is still going on uptrend. All right, so it has broken the previous high. Which makes sense, which tells you that probably market can come back and test that previous high to validate it as a support and continue pushing up according to the monthly time frame. Then you will now use all these data, bring down to 4-hour time frame, and zoom out, 4-hour time frame, 1-hour time frame, 50-minute time frame, 5-minute time frame, and 1-minute time frame. When we come to 1-minute time frame, almost everything that we spotted is gone. We can't even see them. So what you need to do is to get them zones from the the bigger time frames to the lower time frame. That will help you to be able to know why market is behaving this way currently. Realize that market sold today up to this level before converting to a bullish move strategically. So this is what we have to look at when we are trading boom and crash.